Hi, just a quick update on the index liquidity going into Monday the 21st and futures Sunday the 20th. Just having a look at the index proxies here. Got three liquidity indicators. The top one is a time-wide one, the thickest line being the shortest time period that's displayed here, 3 hours, through to the thinnest little line there is 500, an average or a moderation of the current time and the previous 500, a little bit like a moving average. We can see here in the irregular liquidity, the golden line there is the 50% line. So basically, nearly the whole of this climb we have stayed irregular liquidity, although it's had a couple of upticks here that we can see in the red in the time lag. It's stayed below the 50% bar, meaning that we've had buying the whole way through. It's a very strong market, and here we can see the liquidity sentiment since that bottom really has. It's just got tighter and tighter. It's a very strong market. Look, that is what happens as prices rise, and before we get into a topping position, we tend to see that. We'll just quickly look a bit of a zoom in here and see what happened over the week coming in from Thursday and Friday. We can see that we had some nice buying from Wednesday through. We had a tight section here in the SPY, and then we had a little bit of selling as we went into OPEX. Let's have a look at the SPIX and see what the SPIX said. SPIX said pretty much the same thing, nice big, much greener than the SPY, and then this selling day before a little bit of greening up in the last part of the day. Let's just have a look. This is pretty much how I trade. I go in from a long way out. I check through my three liquidity indicators to see what they're doing, what they're lining up for the day. I do always have a look at the forecasts in the open interest and the options, and they're pretty flat for the start of the week, but they're very green. So after we get a little bit of bumping around post OPEX, hopefully it'll start to take off. The NDX, not as green, not as strong. There was a little bit more buying in the mag, but I'm not going to put them up today. Here again, we can see we had a very strong period in the Qs, well down here, nice and green. You could have followed that the whole way through. I trade in the 5-minute zone. That's where I get the best support when I'm trading during lit hours. And we can see that a couple of these grabs down here, they've been well supported in all three indicators, and there's a good 10 to 20 pips in all of those rises. And then there was a very good sell here on Friday, went very red, and we could have sold it in that 5-minute zone. I think it's probably even clearer here if we go and have a look at the SPY. Definitely the last couple of days of the SPY, I wouldn't have been trading this if I was looking around for a trade. You have to hunt around for where the liquidity is. All of these four tickers are pretty correct. They're not going to play against each other. The thing that plays against them is the dollar and volatility. So they're the only other things that I'd be checking at the time to see how the liquidity is. The SPIX here really was the trade. This first trade of the week coming in on Tuesday, going through, was really good. And the SPIX is just telling you here how strong we've gone into the end of the week, Friday, in the 5-minute. Very, very strong. It wasn't as good on that short. It definitely was climbing, ready to get into that short. But that short from the open wasn't as quite as strong in the SPIX. It was stronger in the SPY. Anyway, that's how I would stay in a trade. I would be looking at the green thickest line to stay in a trade. I do watch how those top lines travel through. I also just check to stay in a trade. I check the irregular liquidity that would hold me in a trade, and that would have just pretty much from Wednesday would have held you in that whole trade for 25 pips or 30 pips, maybe even more. Let me just measure that. You would have got an entry somewhere here out of the bottom of here, and you probably would have traded 73 pips if you'd traded that the whole way into this peak there before it blew off. That's a good trade. You only need a couple of those for the week. Anyway, that's how I trade. Have a good week's trading. If you want to see more on the YouTube channel, there's a Liquidity 101 explained. I'll also pin it on the front of our website, just so you can always see what we mean by liquidity, how the indicators work, the basics, and we'll always update these, how I trade, and we'll also do how I invest using all of our data. Have a great week's trading.